Within the next 7 days of price action, Bitcoin will have either broken below the horizontal support at 60,000 or the downtrend spanning back since the start of June. Which way will Bitcoin go? Why is this move so significant? And how can you prepare? These are questions we're answering in today's video. Let's dive in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic and relaxing weekend. In today's video, we are taking a look at why the next 7 days of price action will be absolutely paramount in determining where Bitcoin is likely to move to next on the higher time frame. Will we see a breakdown of 60,000, or is this weekly downtrend we have been in since the start of June coming to an end? We'll also be taking a look at the short-term price action, Bitcoin dominance, the weekly charts, and the total cryptocurrency market cap in today's video. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you were interested in taking your trading to the next level, join us on VIP. We have a sale at the moment, an end of financial year sale. You can join for 10 to 20% off regular memberships or 40% off our lifetime membership. We only have 20 spots available, and many of those have already been taken. If you want more information, go ahead and click these links to find out more. This is a channel here. You can see we post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, including access to the multitude of group chats we have over here with all of our 700 members. Go ahead and check it out, and let's dive on in. So starting on the short term, a quick summary of what we're seeing and what we're going to be talking about today. As we discussed just a few moments ago, Bitcoin is really coming up to a major decision zone, and that decision zone is going to be the apex point between that downtrending diagonal resistance represented by this diagonal trend line, which we have been in now for, we're looking at around nearly 30 days. And of course, that major $60,000 support level, which acts as the prior pi cycle high of the prior cycle, and the area of weekly support we retested back at the start of May, and now once again at the start of July and end of June. So a very significant level. And as we can see, within the next 7 days, if we go ahead and drag out this horizontal level, we're going to be crossing through this level as per the current trajectory of the trend. So that tells us we are either going to see a break of our downtrend or a break of our horizontal support by the time we see that trend line cross through around the 5th to 6th of July. So the next 7 days will play a massive role in determining where Bitcoin is going to go, and we're discussing that in today's video. So let's go over the market data to start with. The 24-hour volume is down 51%. Pretty much as expected. The weekend volume is pretty much next to nothing lately. So a 51% reduction in volume. 24-hour volume is 51 billion. 24-hour liquidations are down 73%, sitting at a total amount of 34 million. Of the 34 million, 23 million have come from longs, 11 million have come from short positions. Looking at the market data, DXY over here, we do see on the DXY, we have had that break of the RSI. This downtrend is actually a representation of that 8-month-long downtrend the dollar has been in. But more importantly, if we relate this to our risk assets, if we look at Bitcoin, since the start of that downtrend on the DXY, Bitcoin entered the bull run. We saw that bull run start in October. We saw that downtrend on the DXY start in October. We have been in a downtrend ever since for the DXY, and we have been in an uptrend ever since for Bitcoin. So we can see here just the inverse correlation these markers have on the higher time frame. We go down to a small time frame, the correlation gets smaller. We zoom out, the correlation gets a lot stronger. The inverse correlation gets a lot stronger. So as we can see over here, a very important level for both the DXY and for Bitcoin. Moving over to the S&P 500, we can see the S&P 500 had a pretty good week. We have closed out the week mostly red at 5,521. The weekly close over here did not engulf the prior green week, which is a good sign. It is not showing us any signs of potential tops here in the short term. We are watching how we develop in the new week, particularly with that DXY. Moving over to economic data, we did have our PCE data come out. We did have our personal income and spending data come out. We saw this spending data actually came a little bit under consensus, which is a good sign. Inflation is slowing down. We saw personal income come a little bit underneath the consensus, which again is a pretty good indication inflation is slowing down. But we saw PCE come up actually a little bit higher than previous, which is an indication again that we could see inflation heating up. So we saw a little bit of a mix, a little bit of bearish to neutral news over here. Not all that significant, and definitely not significant enough to determine or to massively influence the expectations on the next Federal Reserve interest rate decision. That is very much still likely to be a pause. So that being said, guys, let's go ahead and jump into our Bitcoin analysis today. A quick word from BitUnix and BingX before we do. I wanted to briefly interrupt today's video to discuss the two major exchanges we use on this channel, BitUnix and BingX. If you sign up via my links down below, you'll get access to 15% lifetime discounts on all of your trading fees, including up to $5,000 in bonus trading rewards. BitUnix is a global no KYC exchange offering access to absolutely everyone from every country on the globe. Whether that be trading spot or futures, there are over 200 trading pairs with access to 125x leverage, making it the perfect exchange for day traders. If you are interested in another option, we have BingX. BingX, as like BitUnix, has access to over 200 spot pairs, large liquidity pools, and 125x leverage. However, they do have a pending KYC regulation, and they don't offer services to the USA, the Netherlands, and Canada. So go ahead and check out those exchanges via the links down below and join us where we trade on BitUnix and BingX. Let's get back into the video. Okay team, let's go ahead and jump on in, and we'll keep today's video short, sharp, and snappy, getting straight to the point. As we can see, Bitcoin right over here is converging just between that horizontal support level and that major weekly downtrend. That weekly downtrend, if we take a look at that weekly downtrend, it is quite a steep weekly downtrend. The trend angle is looking around to be at around 49 degrees. If we look at that trend itself, we've had multiple retests. In fact, we've had 3 retests of this downtrend, the most recent one being the 20th of June. If we take a look at the depth of this downtrend, this is around 16 to 20%, which is pretty large correction, as it has been a perfect correction from the range high of the high time frame horizontal consolidation to now the range low of the consolidation, with a massive liquidation wick underneath. This liquidation wick on the 25th of June. And of course, the recent one on the 29th of June, particularly the one on the 25th of June, was the highest single day liquidations for Bitcoin since the 13th of May, which again was this major wick we see over here on the 13th of May. So generally, when we see mass liquidations, it's an indication that we do potentially see the trend start to reverse, or at least attempt to begin to reverse. So with these liquidations, we can also identify sell-side liquidities, a point at which the price action could potentially continue lower. What we can see with this downtrend, of course, is that, like we mentioned just moments ago, it is going to be converging with our major $60,000 support in just 5 to 6 days. So let's go to a macro and then come back to the short term. The $60,000 support, as represented by this horizontal box, is going to be the pi cycle high point on the weekly of the prior yearly cycle, the 2021 cycle. This was the pi cycle high. We can see in the 2021 top, we saw deviation above the 60K high, and then we failed to sustain above, validating that move as deviation. This marked the top for the 2021 high and resulted in the macro downtrend. What are we seeing in this instance? In this particular instance, we have seen two retests of the 60K region after we broke above that respective pi cycle top point. So this area is still an area of support. And most importantly, the market is still respecting it as a base of support, and we are potentially seeing a support resistance flip still play out. With this range, we've developed that major 20%, 3 to 4 month long horizontal consolidation above 60K, which has yet to be proven as distribution or consolidation, accumulation. We'll find out when we break below the support or above that resistance. Now, the 60K region is very, very important, as if we look historically what has happened when we broke below this region, we saw a large correction for Bitcoin. So we would assume a similar response. If we were to break below 60,000, that from a structural perspective would be the first indication of high time frame weakness we have seen for Bitcoin since we essentially started the bull market. If we look at the bottom, we had our absolute lows, we had our higher lows develop, we had higher lows develop, this was a horizontal consolidation, we had higher lows develop, again ETF approval, we had higher lows develop at 60 upon the support resistance flip, and we are now retesting that similar low. So a loss of that $61,000 to $60,000 region would be the first time since we started the absolute bottom, since we entered that bull run, that we would have seen a dent in the armor, or you would see a failure or a change of character is the better word, of the current trend. That would indicate actual weakness in the structural integrity of the trend we have been in for the last 12 or so months. That could potentially mark a top. So that is what we're watching out for, guys. And again, if we go back to the short term, we're going to get a pretty solid answer in regards to whether we're going to see a break of that downtrend or a break of the 60K region at the first week of July, which is why we said the next 7 days is so important. A lot of people are going to say in the comments, you always say this is important. Well, guess what, guys? When you look at things from different perspectives and time frames, sometimes things are important on an hourly chart. Sometimes things are important on a daily chart. Sometimes there are important things on the weekly chart. The reality is, in this particular instance, the next 7 days will be very important, as again, the directional break of this support or this downtrend will have a massive influence on the directional moves of Bitcoin over the next coming weeks. Another thing we do have to watch out for here, guys, is going to be that monthly uptrend, this 8-month-long uptrend. As we've said already, this 8-month uptrend is corresponding with that 8-month-long downtrend on the DXY. So we do have that point of confluence over here that we can go ahead and we can assess that from two different perspectives. Again, this bull market uptrend is a representation of the bull market itself. We entered this uptrend upon the breakout of the 32K resistance, and we have been in the uptrend ever since. We are seeing some signs of weakness in this uptrend, particularly from a technical perspective. We are seeing again indicators such as the Gaussian channel breaking down. We are seeing indicators such as the bull market support band breaking down on the daily. These are indications of weakness, but more importantly, they are indications of decreased volatility. If we look at the consolidation range, if we see massively increased volatility, and then we move into periods of massively reduced volatility, these moving average based indicators are going to begin to flip bearish. That does not necessarily mean the trend itself is bearish. The trend itself is represented by this diagonal trend line. This is the trajectory of the price action. We are sitting above the trend, and therefore we are in a uptrend. All we are seeing here is representations of potential exhaustion within the consolidation zone, which could increase the likelihood of a break of the trend, but they do not validate the break of the trend. So they're two distinct different things. If we look at it from a technical perspective, the 200 moving average, which we broke above in October, initiating the start and the eventual breakout of that yearly resistance and into the bull run, we are still sitting above that level. That level is going to be converging with that bull market uptrend relatively soon. So if we do sustain above this bull market uptrend, it is likely we will remain in a overall uptrend, even if we were to see deviation into this range temporarily and a continuation higher. It is only if we lose the 60,000 and this diagonal uptrend will we potentially see this gap on the VIPV fill, and that takes us down to this $52,000 region. So again, the bearish scenario is a break of these two important levels, which could result in an extended correction into 52,000. So let's jump over to the short-term charts now and really get into what is happening and what to expect next. Moving over to the short term, we can see again, we do have that 6-day period. So if we zoom out now, we can see these ranges a little bit more clearly as per what our VRPV is suggesting. You can see already how much volume, how much historical volume has been painting up within this consolidation range. a whole bunch of liquidations are set above and below these trigger points. Our trigger points being the range high and the range low of our horizontal consolidation, meaning above our buy side liquidity at 73.8 and below our sell side liquidity, which is now going to be our most recent one at 58.4. Therefore, a break above 73.8 will not only result in a massive short squeeze and macro continuation upwards into the 80k region, but a break below 58 could result in that flash correction, potentially taking us down to 52,000. So those are the two high time frame price points you should be watching for directional moves to flow. If we're looking at the intra-range price action, for us to see the price move back up to the range high, we would need to see this downtrend break out. For us to see the potential move to our buy side liquidity, we would need to see the 60k region broken. Let's go down to an even smaller time frame temporarily and discuss what is happening. So the smaller time frame price action is a little bit more choppy. Let's go ahead and draw out our current ranges. We have got a range low right over here. This is going to be our range low support, and if we go ahead and just quickly clone this, this is going to be our range high resistance right over here. So this is our range low and our range high. We can see we have created, sorry, excuse my voice, a pretty clear horizontal range. We have had deviation to the low side over here, which again has been validated as deviation as we did bounce back within this range, and we do have our trigger points for continuations above. Our diagonal resistance moves through this range, and therefore a break of that range high will also break that diagonal resistance and result in a continuation higher. While we sustain our range low, we are expecting continuations to the range high. If we break below the range low, look for continuations towards our sell side liquidity gain. And again, if we lose our sell side liquidity at 60,000, that would be the confirmation we could potentially see moves to a high time frame sell side liquidity at 58,000. That is a short-term price action. Don't expect all that much to happen over the weekend, but more or less watching reactions tomorrow, the day after, etc., etc. Let's move over to Bitcoin dominance. Bitcoin dominance is looking okay. Again, for altcoins to really start getting some strength back into them, we would like to see this uptrend break on the what do you call it, Bitcoin dominance chart over here, represented by this diagonal trend line. Furthermore, we would also like to see that 50 EMA break. The 50 EMA break is at around 52.6% underneath this uptrend. Again, we saw the false break of the 50 EMA over here. If we look at the Bitcoin price action on a higher time frame and bring up that 50 EMA and go to the daily chart, we saw a very similar reaction on the 50 EMA right about actually, I think it was a 2-day chart. Let's go to a 2-day chart. We did a video on it all the way back. Right over here, we saw that false break of the 50 EMA, and then we saw that breakdown and then continuation upwards. We've got a Bitcoin dominance chart here. We can see that kind of matched up with that level exact date-wise. So we could see, again, a break of that level, which would represent a shift since this point and put us in a downtrend for the Bitcoin dominance chart. That, of course, will likely bring some money into altcoins for Bitcoin and push the altcoin market up. We're going to leave the video there, guys. Hope you have a fantastic day. Check out the exchange links down below for 15% off. Again, BitUnix and BingX, and we'll see you guys in the next video tomorrow. Cheers.